So having said that, Sanjay, walk us through what transpired for AU Small Finance Bank for the quarter gone by. How much was the core business growth and what did you exactly achieve from your banking business?
So Nikunj, this was our just first year and we completed this month only, and I think the journey is phenomenal, because we were working as an NBFC till March 17. So this full first year, we would have actually understand the whole mammothness around this platform. And as I commented in past also, that this is more of a pull platform than a push platform. And honestly, in last 1 year, we get surprised by the pull of this platform, and we would have able to grow our disbursement by 67%, 60% around. We have grown our AUM by 50%. We are able to raise approx 7,000 crores of deposits with 32% around CASA. So I think and the asset quality remain very strong, and our gross NPA is around 2%, net NPA is around 1.3. So I think overall, this year is phenomenally for us, to start a bank with this kind of note. And, our profits are, somehow remain stable, right? Because in spite of so much of cost in this year, and we're still able to manage our ROE around mid-teens, which we promised maybe 2 years before. So I think overall, I can say that, the team has performed well. The market has responded to our franchise in a very different and very positive manner. And I hope that, there are a lot of challenges going forward, but I think with the kind of execution we have, the focus we have on the execution, I think we can overcome many hurdles as we move forward.
Now, and again, would appreciate your guidance on them. First, the cost of borrowing is now incrementally going to go higher from the wholesale side, and B, the cost of migrating into bank, I'm sure will be impacting your FY19 financials as well. How will things change because of these two aspects in FY19?
So Nikunj, as I commented earlier also, that bank platform will require at least 3 to 5 years to get stabilized around its cost, to stabilize around its incremental deposit cost. And there are two prime reasons for that, that we are so new. We have opened around 375 branches in first year itself. And there are a lot of costs around branch banking, and to build a branch deposits, to build a branch banking, and to the level of BP, require 3 to 5 years. What best you can do that we can reduce the years. So for 19 also there will be a pressure on our the NIMs in everywhere, because the branch won't get profitable in this year also. In the best of the class, we can manage it in FY20. And so I think there will be a bearing on the cost from the branches. Otherwise, our asset machine remain intact, right? We will grow ourselves by, again, by around in the range of 35-40%. Our ROA will be stable. There are pressure on yields, but I think largely the NIM pressure will be around our branch costs, right? And in terms of incremental cost of borrowings, we were borrowing around 9.5 around on NBFC platform. Incrementally, we have reduced around 150 basis point. I hope that, and our cost is around now 8.25. I hope that because of two reasons. One, the old borrowings on NBFC will get repaid in next 2 years. And also our branch banking will get stabilized, and this will allow us our cost of borrowing to go down, right? So, and I think any number around 7, we are looking for this year end. But I think this will be the saving, and the branch cost will be will have the impact on a P&L. So this is how we want to go for this year.
Okay. Mr. Agarwal, what about inorganic growth plans and consolidation?
No, I think it's very early for us to look for all this, because we are bound because of some licensing guidelines and around RBI's agenda, and we are here to fulfill that in first 3 to 5 years. And as we will move forward, we become more confident around our things. We're more confident about this platform. I think then it's more in future than a near term.
Why are you growing at such a strong rate? I mean, it's very impressive, and it is very heartening to see your growth engine is still humming at a large base. But do you think the base effect would kick in, or you're confident of maintaining a 30-40% growth? Because, you know, it's an enviable growth, Sanjay. I hope you'll appreciate my curiosity, because others are getting hit because of the base, and yet you are not getting hit because of the base effect.
You know, people have to respect our 20 year of legacy around asset, right? And we are in this business from last, 20 years. We know how to lend, how to collect. And we are actually a full-fledged bank in terms of our asset engine, right? We do vehicle finance, we do SMEs, MSMEs, home loan, consumer durable, gold loan. You know, we have a wider aspect of assets, right? And that is too with a lot of team, vintage, the experience, and of course, you're right. You know, we have the base advantage, but you know, it's not about only base. You should know, you should be confident on the ground that you know you can lend the money, you can collect the money, and so it's about franchise. So I hope that for next 3 to 5 years, honestly, Nikunj, you know, if we grow lesser than 30%, I'll be surprised myself.
Right.
Now, what is your understanding of the way how the economic recovery seems to be shaping up? And I'm asking about a broader take on your, you know, your understanding of various verticals. I mean, Chola numbers were strong. That means vehicle finance is doing well. We got excellent guidance again from Bajaj Finance. That means retail loan is making a comeback. Within your business verticals, where are you excited about recovery and growth both?
So I think on a larger comment on the economy, you know, I believe that there are certain sectors which are not performing, but whole consumer sector around service industries, around vehicle, around manufacturing is seeing the sign of, you know, some recovery, right? You know, so if you leave the real estate sector, if you really leave some kind of, you know, crony kind of sectors which has some linkages around government sanctions or government approvals, are still in pressure, right? But independent business built on some models, some kind of USPs are faring well, right? And we are into the retail kind of markets, right? We are into that deeper markets where the consumer spends, right? And there is a minimum kind of economy level where we have to place ourselves and look for asset and then just fund it, right? So in my opinion, I think because of GST, I think there will lot of positiveness is coming up. You know, we are not having any challenge around except crude. So I believe that if India plays right in next 2 quarters, you know, so we are, and in spite of all this, I think election phase of next 18 months, you know, we have our better times ahead.